right, welcome back everyone to another episode of Chart Talk. Today's Tuesday. We're doing a market recap. Again, today we had a little volatility in the markets. We had the 10-year rates with a interesting little day here. We had gold breaking out to new all-time highs. We can see very textbook bull flag breakout that I remember Darren was calling out a few weeks ago about this setup in gold. Very textbook breakout here. We should probably see a move to 332 based on this $16 flag. So we should expect $16 move higher. So if you're in gold, expect short-term move up to here. So again, we've been expecting this shift out of the very clear breakout stage that the markets have been in pretty much since May. We had the crazy volatility with the tariffs. We've had some news today about maybe Trump overstepped and maybe it's unconstitutional, adding some uncertainty to the tariff war. But the market did shake that news off in April, and we've rocketed higher. Now, pretty much since this day to take notice on July 31st, where the market opened at all-time highs. Let me zoom in a little bit. Opened at all-time highs and then sold off was the day to take notice. And again, I apologize for this mouse going all over the place, but here is the day we want to take notice. Market opens in all-time highs, sells off, bearish engulfing, gaps down into support, and then we rally back higher. And this is that shift out of the breakout stage that the market has been in. Since this gap up, this was in the breakout stage. Market has been very easy, grinding and trending higher. Once we saw this break, that shift to more of a consolidation pattern has come into play. And we were anticipating this sell-off at the end of last week, and nothing crazy. We highlighted this in the newsletter, not pull the fire alarms, run for the hills, but just we're shifting into a range-bound market where you need to be buying into support and selling into resistance, where this whole time, buying the resistance or buying the new all-time highs was the move. Currently, not the move anymore. Again, we're changing stages, and we've seen this more specifically with the material sectors, which was kind of the leading cue here, where they were the first to break the clear breakout stage to the downside. They were the first sector to do that, which we can see here. And then they shifted into that consolidation or topping pattern that we will see here. And again, these patterns, what typically topping patterns, goes one of two ways. You either have continuation higher or continuation lower. And so far for materials, we've seen continuation higher. We've seen that new breakout to all-time highs. So that has been a little bit of a leading clue for us. And again, with the cues today, with that gap down this morning, markets looked pretty bleak, but we had that gap up again. We can see the market gapping into the moving averages, and buyers start to step back in. But again, not the easiest thing to walk into Monday morning gap down, but nice little reversal. Again, we're seeing the same action in the S&P. Again, the overall theme here is a shift into a topping consolidation stage. So we can see the uptrending higher highs and higher lows is no longer really in play. And now it's this horizontal action with clear resistance in the 650 area, clear support at 630. And we're just going to kind of ping pong back and forth in this 20-point range. And if we break to the upside, we should expect to move to 670. If we break to the downside, we should expect a retest of this prior pivot around 610. So we've seen materials leading so far. We would like to see the NASDAQ and S&P continue with that. Again, energy has been on fire. We had a nice alert during this support buyback down here a week or two ago. So nice breakout since. And our key focus for the week was this Walmart. So we had a nice trade in Walmart about 2 weeks ago through this 100 area, through 99 through 100. We caught a nice trade. We took most of the profits into this up move. Again, the goal was to sell at 105. We got a few cents within that range. took most of the profits, and we avoided this gap down and kind of chop here. But going into the end of the week, with the kind of shift away from these breakouts, we saw this tight consolidation at Walmart's short-term support. So again, it was pretty weak the last 2 weeks or so. Pulls in from 104 down to 95-ish, so pulls in about $10, and then we get 3 inside days in a row. Very tight action near support, and again, it's indecision. Buyers and sellers kind of at a standstill. Again, obviously right here, very clearly buyers in control, gap down, sellers obviously in control. So we have these 3 inside days near support, near these moving averages. If the name is going to trade higher, we just want to buy above these high of days and very simply place our stop below this low of day. So on Friday, we started to get into this Walmart through that break of that 96.50, 96.60 area. And then today we added through that 97. And for now, Walmart is in this much broader range of 105 being resistance, 95, 96 being support, and we're going to trade this range. We want to see Walmart push up to these moving averages. We want to see it push back up into this ideally 102 to 104 area, and this is where we'll look to take profits. And again, like we're seeing that shift with the indexes out of clear breakout stages into consolidation phases, we want to be buying off support, selling into resistance, and trading those ranges versus waiting for those breakouts. But there is still quite a few names that have been setting up, so we're going to do a quick scan. We had this KNSA, which was a alert today through 34. We had some members getting into that one. Very textbook breakout through 34. Stop verse 33. We can see the moving average catching up. So right now you have a dollar risk in this trade, ideally aiming for 5 to 1. So aiming for at least a move to 39. BSX, another name again, healthcare. Back up for a second here. Healthcare names in general have been very weak in this rally. They really have not participated really in any capacity. And we can see a very clear stage 1 base. So we can see, I'm going to make these in yellow so these lines will be more visible for you guys watching this. So we can see while the market has been breaking out for the last 3 months, most of the sectors have been rallying to new all-time highs. Healthcare has been lagging. They've just been basing out here, very clear base. And as of late, we're seeing a very tight consolidation under the resistance area of the base, and all the moving averages starting to catch up. So what we can see here is this very tight flag forming at the resistance area of this major base. So again, I'm going to change this so it's more visible to see. We can see since the tariff war, healthcare has been stuck in this 20-point range. Could not break it in April, could not break it in May, could not break it in June. Still same thing in July. And now in August, it's finally starting to poke higher. Now what makes this much more likely to break to the upside is that all this entire time cannot break this 230, cannot break 230, can't break 230. Now it can't break under 250. All the moving averages have kind of coiled up, and now they're acting as support, supporting healthcare here. And now you have a much tighter trade in this sector, buying through 256 versus 250. This is a $6 flag or $6 risk versus $20 of risk. So this is broadly a very good sign to see for the healthcare sector, which has been lagging. And if the major markets, major indexes are also going to go into this consolidation phase, we're going to see rotation like we saw with energy last week. Energy was at support. We can see the short-term support area, and let's change this line. We can see, the pretty textbook breakout here, but we can see that support area that was forming, and they're playing catch up again. Energy's kind of lagged in this rally a bit. Healthcare has without a doubt lag significantly. And if the markets are going to start to base out and flag, as well as all these other sectors have been very strong, technology names, financial names, utility names that have all been extremely strong in top right, if there's going to be rotation, very easy to see a sector like healthcare play catch up and break out of this base and try to retest their prior highs. So again, healthcare has been weak while it's been basing, recently showing us very bullish signs that this stage one base could break higher. And that's like this BSX in this same sector, very strong, near blue sky breakouts, near all-time highs. If the healthcare sector is going to break out, this chart looks poised to, drift higher. It's in this, again, very tight consolidation. All the moving averages are catching up. We can see very clear resistance. This name has not been able to break this 107 area. Couldn't break it beginning of the year. Couldn't break it in May. Couldn't break it in July. Tried to break it end of July. But we can still see very clear resistance at this 107. So whenever this level is ready to go, we want to buy above 107, have a close above 107, and then we have very tight risk here under this 103, 104 area. So $3 risk, amazing chart pattern in a sector that's lagged, that is looking poised for a breakout. Again, Walmart, our top idea for the week. We look on a heat map today, Walmart is probably one of 10 names in the S&P that closed very strong. And again, we were buying it, super tight risk through 96.60, adding through 97, and now holding and being very patient to see if we can get a move up through 100 and look to take profits, ideally in the 102 to 104 area. Next up, we have this DRI. This is one of Abby's top ideas from last week. Again, we're seeing that same theme here. The big focus is finding these names that are hovering, holding up near support to buy on the way back up out of these little mini bases here. So we can see very clear resistance through 210. You can see very clear support under 205, $5 risk. Kind of an easy move to retest these prior highs over the next couple of weeks. Next up, we have ACLX. Again, definitely going to take some time here. Really, the key thing is to keep an eye on this 74 level, but nothing really developing that's screaming to have a support buy. We probably need to see shake out of this 65 area before it really turns back up and we see that breakout. FIX, another name we've been keeping a close eye on. Nice earnings flag here. And we can see a seller in this 730 area versus, again, still a bit wide. Again, on the radar, big range here, talking 70-point range. So we need to see this tighten up a bit more. But again, try to keep on the radar. XYL, another earnings flag, very tight consolidation. Again, only focusing on that breakout through that 145, 146 area. Again, still pretty wide. More likely we'll probably have to shake it a little bit lower and catch up into these MAs before they turn back up. But again, for this one, clear focus is really that breakout. WST, another name, is one of Abby's ideas she's been focusing on. Again, we can see the base that's been forming for better part of the last 2 months, and now it's starting to tighten up a little bit here. Again, key thing is waiting for that break and close above 250. We can see how tight this name has been getting. We want to just see the break and close above that 250. Tesla's been a name on a lot of people's radars. Very tricky name here, but massive wedge that's been forming. Kind of started to poke out of that wedge recently, but just doesn't have the volume just yet. We can see, this wedge that's been forming. So it kind of pokes above it, back in the range. Again, needs to, tighten up a bit more, but another name to keep on the radar. MOD, another nice earnings flag. forming through that 145. Again, with a lot of these breakout setups that we've been seeing, with how the market's been shifting to this consolidation stage, this is kind of temporary pause on buying the breakouts, but keeping them on the radar and waiting for the markets to break and close above the all-time highs, and then we'll start to see these breakouts come back into play. Again, Nvidia had a pretty impressive report end of last week, but again, we do not care about what they reported. We care about their forward guidance. They had an amazing quarter, but that tells you the past. Markets do not care about the past. They want to care about forward guidance. So if they hinted any weakness that they see coming ahead, that's going to be that little bit of a sell-off. So we're seeing that same thing. We're seeing this topping pattern. We're seeing it over and over again. And these patterns, we're seeing them in the indexes, we're seeing them in the sectors, we're seeing them in individual names. NVIDIA is 8% of the S&P right now. The clues are there. The clues are this shift to consolidation, this shift to more patient trading, this shift to focusing on support buyback setups and being very, very narrowly focused on these top ideas. Our one main idea this week, Walmart is one of the only names that closed bullish engulfing today. You scan the entire S&P, 90% of those names are closing somewhat like this. And we've seen that action recently. And this is why we're focusing on large cap names, near support, very tight risk entries. And even if we're wrong right now, cost basis is 96.80 between the two ads, I can easily risk $1 in this name. No problem, even if the trade fails. Not a big deal. To potentially make $6, $7, $8, $9 while the market is shifting into this new stage. So for the week ahead, again, shortened week, 3 more days of trading. Expect to see the market kind of ping pong back and forth in this tight range. We probably get some continuation tomorrow. We more than likely, again, filling this gap really is a non-issue, but this is resistance, 650, 630 is support. And in these tight ranges, you missed the buy off the open today, and it's very hard to chase tomorrow in the middle of the range. So not the easiest action. This is not action to chase. You have to be really patient with these setups. Sometimes you miss them and you have to wait a week or so. It's not the end of the world. But just know with this shift, you have to be almost ready to buy up on the days when they gap down into support, which is not the easiest thing to do, but we're seeing that clear shift and we have to adjust because the easy breakout market is in the past, and now we have to get used to this new topping stage. So Becker, thank you for popping in. If you do have any questions, you want to unmute yourself, more than welcome.
I missed the meeting for today, but it's good to have it at this time. Actually, I'm just leaving work, so it was perfect for me. I'm just in AXP right now.
That's great. Where'd you get
Yeah,
in?
I 327.
Okay. All right.
I just rebought today. I added a few shares. But I was shaking out on Google. Google was my main position. Sadly, because they had like almost 7% gap up after hours. But it is what it is. So far, I've been avoiding losing money, so it's the most important part. Right now with this kind of market, I guess. And I've been learning a lot, just to the program. I've been focusing on finishing the book, and I've been taking a look at trying to just enter A plus. So I'm really happy when you keep your feedback. Tell me it's an A plus setup, so I know I'm looking at the right place. Yeah. So far, I'm mostly in AXP, very small risk right now.
Nice. Yeah, you're breaking up like crazy, but I knew what you were saying. And again, chart wise, you've been doing very good with the charting. Shakeouts are part of the game. I actually had a pretty brutal shakeout in Google where I lost nothing, but it was right down here. I was buying it through 180 and got shooken out right before the move. So, shakeouts definitely are not the funnest thing, but chart wise, you have been definitely charting some really good names, focusing on the strongest names. Google, hitting all-time highs. American Express looks phenomenal. New all-time highs again. Maybe we got shooken out today for some, but again, just keep focusing on these, top right names, banging on all-time highs, and these are the names where you have that tighter risk entry, and when they start to go, you get that drift higher with ease. Where these buys down here, again, it's a much more difficult trade than these trades through highs. So definitely keep up what you're doing, keep posting those top ideas, and any questions you have, always here to help.
So I try to apply, we have a gap down today. I try to apply the 15-minute rule. I know that it's not like written in stone that you have to wait specifically the 15 minutes rule.
Mm-hmm.
But I think I learned that I should be looking at a stronger support line instead of just placing my stop loss at the 15 minute after the 15 minutes low of the 15 minutes.
Are,
I mean,
are you saying this for American
so
Express
I
or
was taking a look at the no, for Google.
Google? Okay, let me go to Google then. Give me 1 second.
Yeah.
Yeah. So again, the 15-minute rule. I'll give you a quick little lesson on it. Is to bail us out of the names that are gapping down below our initial risk in the trade. So there are going to be times like I had American Express up, and the 15-minute rule would have kept you in if this was gapping down below your price. 15-minute rule holds, trades higher. Phenomenal. Again, it's the name is already gapping down against you, and this is where it's like, you pulled the parachute didn't pull, you have your backup chute, and now you're pulling it, and the only thing is safety. And that's the main concern is I just want to get that cord, I want to get the second chute out, and I want to land on the ground. I don't want to come plummeting into earth. And that's what it does. So in scale, if you have 10 trades that gap down below your stop and you're trading the 15-minute rule, there's going to be one or two that it works perfectly and you can turn it into a profitable trade like this Google. And that's going to be the one when it doesn't work, you're going to be like, that sucks. But this, again, there's definitely some news, but that's where this little shakeout, it sucks, but again, still very tight risk. It's not like it gapped down a crazy amount and then pushes you out. It just happened to fail. And it's hard to say, oh, I would have canceled it and waited an extra 45 minutes and then moved it there. It's a hard thing to do. Again, we want to do with trading, we want to be very systematic. And if I was in the same 15-minute rule, I would have 100% been out right here, because at this time, it's inside day and down, looks horrible, market looks weak, market's getting cracked, everything's getting cracked. This looks like let's get out of Dodge, because at some point, we're getting and the market does a great job of this. When we get these tighter and tighter flags, we get used to these tighter and tighter ranges. So again, this is 20-point range, 2.5%, 3% range in the Qs. We had 7%, 5% days, back in April. The current range of the market was a daily candle of the Qs back in April when volatility was crazy. So we're getting used to these really tight ranges, but eventually the dam is going to break, and it's either going to break to the upside or it's going to break to the downside. And that's where you have, we get to these super tight days, and this can go on for 6 months or a year, and eventually you get that crack to the downside, and then, everyone's shitting their pants, so to speak, and then volatility expands. So I think, the Google thing definitely probably stinks, but this morning, even for myself included, when I was in Walmart, I got, triggered through 97 off the open, and Walmart did not trade very well off the open. And I was like, I know where my stop is. You can see this red line. This is where the stop was, but I get triggered, you know, pretty much my ad right off the open. And then we get this, next 30 minutes of trading. I'm like, all right, I probably should expect potentially this trade failing, but I've traded the name successfully recently. I have the confidence to stick with the plan. I'm going to leave the stop there, and it closed very well. So again, in your two examples, I know AXP you're still in. This 15-minute rule worked, and then for your Google, didn't work. Sucks that it's up tremendously after hours, but
Yeah.
it's still, this was a good loss. This wasn't a bad loss. Like if you like cancel the stop, you waited, and then moved it to here, it's like you're breaking your rules, and eventually, then the name keeps trending downward, and you're like, I keep lowering the stop, I keep lowering it, and then that 1% loss becomes 5% loss. So you know
Yeah.
that's just
You're right.
part of the game. This definitely
Yeah, I
Mhm.
set my stop at 206.89. So
Yeah, again.
it was pretty much break even.
hmm And that's like you can minus this crazy action. The trade's kind of taken away from you now, but that's where even with Walmart, when I first got in it, a week or two ago, all these trades, I'm trying to get out break even if they're failing. So if it sets back up, I have no issue getting back in. And that's like for you, Google. There's no like pain in the back of your mind, like, oh, I lost 4% in Google. Screw that name. You're like, no, I broke even. I can go back to it tomorrow if need be. So that's the big benefit of keeping the risk very tight. It's very easy to go back to the name when the prior loss was hilariously insignificant related to your account. So all good lessons that you're learning. So
Okay, great. Thank I appreciate the lesson.
all right. All right, my friend. I think we're gonna end it there. I think we touched on quite a bit on this chart talk. And thank you for popping in, and we'll see you guys next week.
Awesome, my pleasure. See you next time.
See you, buddy.